All right, hey, what's going on? This is Dan Keller, your mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today is Sunday, September 24th, episode number 39. 39 weeks in a row, I've come to you with an update and some information that you can use, you can share, and I'm certainly going to ask you to share this information today. There's no doubt that you're aware of the 2006-07 economic and housing collapse that impacted a lot of people here in the Seattle marketplace. And it kind of rolled over into 09, 2010, and 2011. Well, if you know of someone or if you were impacted by the economic downturn, maybe had to file bankruptcy or had to short sell your house or even lost your house to a foreclosure, you knew that you were going to be sidelined for a certain amount of time before you could get back into the housing market. Well, now we're seeing a lot of those people impacted by the housing crisis coming back into the housing market, trying to get a mortgage. The media is referring to those types of home buyers as boomerang buyers. So I want to explain to you what a boomerang buyer is, and I want to explain to you how we're helping them, and I want to explain to you 3 examples that have happened in my office in the last 60 days that really highlight some of the myths in the marketplace and how they were declined at other lending institutions and how we were able to help them. But first I want to talk about kind of a week in review in regards to the markets and what rates are doing. So last week the Fed spoke. Fed Chairwoman Janet Yellen spoke, and essentially really nothing happened. The market actually calmed down. We'll see maybe after the information soaks in, and we'll see what the markets do. But for the last week, there's really no news to share. The week before last, remember, rates actually went up a little because the bond market sold off, but just slightly, not a whole lot to worry about. So I'll keep you posted there. So boomerang buyer, someone that was impacted by a foreclosure, a short sale, or a bankruptcy due to the housing collapse in 06 and 07. So a lot of myths out there that you have to wait 7 years, or you have to wait 10 years. I want to give you 3 examples from just over the last 60 days. 2 out of the 3 examples were people that were told they had to wait literally 7. One of them, they said they had to wait 10 years. They were declined at their lending institution. And guess what? We were able to pre-approve them and get them into underwriting and fully approved. So what I want to talk with you about today, and one of them actually was a VA buyer, which VA out of FHA, VA, and Freddie Mac and Fannie Mae and USDA has the most lenient underwriting guidelines of all of them. So I want to talk to you about that as well. But let's talk about some of the myths though real quickly, and then some of the facts. Myths that after a bankruptcy you have to wait 7 years. Myths after a short sale or foreclosure you have to wait 7 or 10 years. Let me pull up this matrix on the screen so you can see the facts. So with a Fannie Mae, that's a conventional 5%, 20% down type loan program. After a bankruptcy, they want a 4-year wait period. If there are extenuating circumstances though, however, a death in the family, something that triggered outside of like a divorce or natural causes, you may be able to go lighter. So bankruptcy, they want 4 years. With FHA, with a bankruptcy, they'll allow for 2 years. That's incredible. With VA, 2 years, and then with with USDA, they want you to wait 3 years. So now, like foreclosures and short sales, a little bit tougher, but let's talk about that. So with Fannie Mae and Freddie Mac, they want to see a 7-year waiting period. However, with Freddie Mac, if you put down 10%, they'll allow you actually to go as low as 2 years after a short sale or 3 years after a foreclosure. FHA wants you to wait 3 years after a short sale or foreclosure, and VA, here's this, more lenient, VA will allow for 2 years. USDA is going to want to see you wait 3 years. So I'm going to put this matrix up on the screen a little bit longer here as I finish talking, and I'm also going to attach it somewhere down below this video so that you have access to this. Do me a huge favor. Share this information with somebody you know, maybe on your social media accounts. If you're a real estate professional, earmark this. Maybe share this with your past clients. If you're a financial planner, same thing. Now is the time to get back into the housing market if you're not. Maybe buy another home, an investment home. We're seeing mortgage rates at, again, historic lows, and we're seeing home values to continue to rise. So if you have any questions on this information, reach out to me. If you have any questions on mortgages, I want to be your mortgage lender, and I look forward to connecting with you soon, and we will talk to you next week. Have a great week.